Hi everyone, and welcome back to Bowdie Shorts, making law make sense in 15 minutes or less. So far in this trust series, we've looked at creating trusts, trustee powers, trustee appointments, and the rights of beneficiaries. But today we're looking at the question that sits at the heart of trust law. How should trustees run the trust? After all, beneficiaries hand enormous responsibility to trustees. Trustees control the trust property. Trustees make investment decisions. Trustees exercise powers. Trustees decide how and when property is distributed. So what stops trustees simply doing whatever they like? And this is exactly what today's video is about. Now, the big picture here is that you've got to remember that trustees are the managers of the trust. Beneficiaries are the people for whose benefit the trust exists. The law tries to strike a balance. On the one hand, trustees need freedom to manage the trust properly. On the other, beneficiaries need protection if trustees get things wrong. And the result is a system of duties and powers. Understanding the difference between them is essential. So let's start there. Duties first of all. Now, a duty is something that trustees must do. If trustees refuse, beneficiaries can go to court and can compel performance. For example, if trustees are required to distribute trust property to a beneficiary who has become entitled, they must do so. A power is different. A power gives trustees a choice. They may exercise it. They may decide not to exercise it. Now, we saw examples of this in our previous video on the powers of maintenance and advancement. Remember, they are powers. The beneficiary cannot force trustees to release money early. So what must trustees do? Well, even where trustees have a power rather than a duty, they still have obligations. Trustees must consider whether powers should be exercised. They should exercise powers properly if they decide to use them. Now, provided they do these things properly, beneficiaries generally cannot complain simply because they disagree with the outcome. Now, whenever trustees run a trust, they owe a duty of care. And the classic test is that trustees should act as an ordinary, prudent business person managing their own affairs. And this is an objective standard. The question is, what would a sensible and careful person do in the same position? Now, the standard may actually be higher for professional trustees. For example, solicitors, accountants, and trust corporations. They may be expected to display the expertise associated with their profession. The more expertise someone claims to possess, the more the law expects from them. So as an example, suppose trustees fail to obtain tax advice and the trust suffers a significant and avoidable tax liability. Well, a prudent person managing valuable assets would usually seek appropriate professional advice. If trustees fail to do the same, they may be in breach of their duty of care. Now, the duties when starting out as a trustee are important to consider. So a newly appointed trustee cannot simply sit back and wait for things to happen. Several steps should be taken immediately. Step one should be to ensure that they have actually been appointed properly. A trustee should verify that the appointment process has been correctly completed. Step two, they must identify the trust property, and the trustees must establish what assets belong to the trust and where are those assets. If property has not yet been transferred into the trustee's control, they should take steps to secure it. Step three, they should read the trust documents. This sounds obvious, yet it is remarkable how many problems arise because trustees never properly familiarize themselves with the trust instrument. The trustee needs to understand the beneficiaries, the powers, the duties, and the terms of the trust. Step four, we've got to investigate the trust's history. So a new trustee should examine previous administration of the trust, Why? Well, because earlier trustees may have committed breaches of trust, and new trustees should identify any problems and take reasonable steps to address them. Step 5. Where physical property is held, trustees should ensure proper records and inventories exist. Trustees cannot protect property if they do not know precisely what property exists. So as an example, suppose Henry is appointed as a trustee, but never reads the trust documents and never checks whether trust assets have been transferred into his control. If a loss later occurs because of his inactivity, Henry may find himself liable. Being passive is not a defence. The duty of impartiality. Trustees often face competing interests, and one beneficiary may want income now, another may want capital preserved for the future, and trustees must act impartially. So what does impartiality mean? Well, it does not mean every beneficiary receives exactly the same treatment. It does not mean that trustees must consult everyone before every decision. It means trustees must not unfairly favour one beneficiary at the expense of another. The trustee must consider the interests of all beneficiaries fairly. One of the most important safeguards in trust law is that trustees generally act unanimously. If there are multiple trustees, they must reach a collective decision. One trustee cannot normally impose their view on the others. So imagine there are 3 trustees are considering whether to purchase a risky piece of land. 2 trustees are enthusiastic, 1 trustee strongly opposes the investment. The majority cannot simply outvote the minority. Without unanimous agreement, the purchase normally cannot proceed. Now, trustees must also act personally, and this is a crucial principle. Trustees cannot simply hand responsibility to someone else and walk away. The role comes with personal responsibilities. So what should trustees not do? Well, trustees should not leave everything to a co-trustee. Trustees should not ignore trust administration. They should not leave trust property entirely under another trustee's control, and they should not fail to supervise their fellow trustees. Trustees have a duty to remain actively involved. A trustee cannot avoid liability by saying, "I didn't know what was happening." If a trustee allows another trustee to act improperly without supervision, the passive trustee may also be liable, and trustees are expected to monitor the administration of the trust. Now, can trustees take advice? Absolutely. Trustees can obtain legal advice, accounting advice, financial advice. In fact, sensible trustees often should obtain expert advice. However, the final decision remains the trustee's decision. Experts advise, trustees decide. Now, many trust powers are discretionary, and trustees therefore need guidance on how these powers should be exercised, and the law requires trustees to exercise powers properly. Now, what does properly mean? Well, trustees must act in good faith, must act rationally, for the correct purpose, and they must take relevant matters into account whilst ignoring irrelevant matters. They should consider all appropriate facts. If these standards are met, courts are generally reluctant to interfere. So imagine trustees decide to distribute trustee funds only to beneficiaries who have red hair and birthdays in March. This would appear irrational and based upon irrelevant considerations. And in those circumstances, a court may intervene because the discretion has not been exercised properly. Do trustees have to give reasons? Generally, no. Trustees do not normally have to explain why they exercise the discretion in a particular way, and this is a really important examination point. Beneficiaries cannot simply demand a detailed justification for every decision made. However, problems can arise where a beneficiary has developed a legitimate expectation. So suppose trustees have provided annual payments to a beneficiary for many years. They suddenly intend to stop. fairness may require them to explain the change and to allow representations to be made. Let's now quickly look at disclosure of information. Beneficiaries are entitled to certain core information about the trust. For example, the trust document, trust accounts, and information about trust assets and investments. These documents help beneficiaries understand how the trust is being administered. So what are beneficiaries not entitled to see? Well, generally, beneficiaries cannot demand minutes of trustee meetings, trustee deliberations, internal decision-making documents, or letters of wishes. These documents often involve confidential discussions and discretionary decision-making. On those letter of wishes, remember a letter of wishes is guidance given by the settlor. It is not legally binding because it helps trustees exercise discretion confidentially. It is usually not disclosed to beneficiaries. Now, can the court order disclosure? Yes. If beneficiaries have genuine concerns, they may apply to the court. The court will then decide whether disclosure is necessary in the interests of proper trust administration. But disclosure is not automatic. Let's bring this all together. When trustees run a trust, they must exercise appropriate care. They must understand the trust, safeguard trust property, act impartially, act unanimously, act personally, and supervise one another. They must also exercise their powers properly. Trustees often enjoy significant discretion, but that discretion is not unlimited. So what's Bowdie's bottom line here? Well, every trustee should remember one simple principle. Run the trust as a prudent person would run their own affairs. That means to act carefully, to act personally, to act unanimously, to act impartially, to exercise powers rationally and in good faith. And remember, trustees do not need to justify every decision to beneficiaries, but they must always be able to justify those decisions if a court asks them to do so. Because at the end of the day, trustees are managers of the trust and the law expects them to manage it properly. Thank you for watching this video in the Bowdie Shorts Trust series. Please look out for other videos available now via our YouTube channel.